Hello everyone and welcome to the short video on our Q1 figures. My name is Sebastian Lehmann. I am the Head of Investor Relations at the EDAG Engineering AG. Before starting with the video, please have a careful view on our disclaimer. So let's get into the details and start with the market environment. The automotive industry is experiencing a positive trend since the third quarter of 2020. The market recovery leads to very strong figures at OEMs and their suppliers. This is transferring into a high request for quotations at engineering services providers like EDAG. The requests are coming from international, but also from domestic customers. Overall, we had a very good start into the year 2021. We had good order intake, very good revenues, but also good earnings in January and February. However, restraining effects were coming from corona restrictions, the chip shortages in the automotive industry, but also a cyber incident that happened in the mid of March this year. Overall, and nevertheless, prospects are brightening up, although a higher level of volatility remains. So what does this mean for our figures? In the first quarter of this year, EDAG has achieved a revenue of 156.7 million euros. This is about 19% below the previous year's Q1. So at the first glance, this looks not very satisfactory. However, I would like to explain these figures in more detail. First of all, we had tough comps compared to Q1 last year, where only minor corona effects were included. Moreover, last year's Q1 included a small series production with a low value added. In this project, EDAG received about 14.5 million revenues last year's Q1. As this project is now finished, these revenues are not included anymore in the figures. And finally, due to the cyber incident, which happened mid-March this year, we have lost approximately 11 million euros in revenues. So overall, this explains a little bit the figures, and we are expecting some catch-up effects from the cyber incident in Q2. The good news now is, if we look at the adjusted EBIT, although we had a decrease of about 19% in revenues, we maintained a profitable EBIT margin. 1.4 million euros adjusted EBIT were achieved. This is a margin of 0.9%. This is mainly coming due to the effects from savings measures which were put in place last year. Moreover, we were even able to manage margin improvements in our segments vehicle engineering and electronics. The order intake in Q1 was very well, with about 204 million euros. These figures are still a little bit below Q1 last year, but significantly higher than Q4 of 2020. January and February were even above our internal estimates. So overall, the prospects are brightening up, as I already said, and we are becoming more and more optimistic, especially for the second half of this year. And another key highlight in the Q1 was the groundbreaking ceremony for our new Munich-based test center. This shows that we keep on investing into our future offering and supply of our customers. Let's have a short view on our expenses. And here we see 2 points which I would like to explain in more detail. First of all, the material expenses. These were down from 10.5 to 3.9% of revenues. Why this? Well, this is to be seen in context to the small series production, which I earlier mentioned. Last year, we bought a lot of material for this project. And as this project is now finished, we are buying less material. So the material expenses were significantly down and are expected to remain at a lower level for this year. And the second thing is the personnel expenses, which at the first glance are increasing tremendously. Well, this is mainly linked due to the cyber incident. As I said, we have lost about 11 million euros in revenue due to this incident. On the other hand side, we had about 8 million euros of value added loss, as we had to pay, of course, our staff, which was not able to work for a certain period of time. This 8 million euros were not adjusted. So if you keep in mind the 1.4 million euros in adjusted EBIT, they would have looked much better if we would have adjusted it, but we didn't. So the personnel expenses are expected to go down over the next quarters as the overall utilization will go up. A short view on our trade working capital. Here we see that it is down about 110 million euros against the previous year's quarter. Why this? Well, due to Corona, we have significantly decreased the trade working capital over the last quarters. We are now at a point where trade receivables with 144 million euros are at a level where we think things will go up. As we are expecting a market recovery and as we have already achieved a good order intake, we will build up trade working capital over the next quarters. Until the end of the year, we expect a trade working capital ratio of about 18 to 22% of revenues. This expected recovery will of course need some financing. And that's another good news. If we look at the net financial debt at the end of Q1, you see on the right-hand side that our net financial debt without leasing was in fact no net financial debt. It was a net financial asset of 4.6 million euros. We had about 130 million euros cash on hand, so we are financially strong and well prepared for a strong recovery. This leads us to our outlook for this year. Overall, we expect a moderate increase in revenues for the full year. Based on the current estimates, we anticipate a relatively weaker first half and a relatively better second half of the year. With respect to the adjusted EBIT, we expect a notable improvement in the positive range, especially as a result of the cost-cutting measures. Overall, we are becoming more and more optimistic, especially for the second half of this year. So if you have any questions on the Q1 figures, or on our outlook, please do not hesitate to contact me at any time. I will be pleased to help you in any way. Thanks for watching this video and have a great day. Bye-bye.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.